Okay, so we're back for another episode. I hate insurance. We thought we'd do an episode on homeowners and the homeowners insurance crisis going on in the United States. Some states it's worse than others. Um, what kind of trends are you seeing?
Well, I mean, the insurance crisis, the first one I saw was in 1985. And, it's basically you're uninsurable, is what you're told after they've taken your money. California, Florida, Louisiana, Mississippi, carriers collect money. Then what can happen does happen, and they basically say you're uninsurable. So obviously, there's a lot of discussion over litigation, that it's litigated. And again, that's why I always say you can't be half pregnant. You have to do the whole job, is because lawyers are going to do their job. Their job is to represent people that are in trouble. And, their home was damaged in a event, and the insurance that was sold to them doesn't perform. And so litigation is, growing. And so we have to bench the lawyers, which is what we did with recreation in 1985 when they said that was uninsurable. We insured people that, ran guided trips on government land, and we had to name the government as an additional insured, and a lot of things that the traditional industry said couldn't be done. So to me, now it's just evolving into other lines of business, and the lawyers, again, are doing their job, representing their clients to try and get us as an insurance industry to do the right thing. So, think ahead of the ball like a good athlete and do the right thing. Don't take people's money that you can't make happy. So, and if you don't have claims, your homeowner's insurance is probably going up a little bit. If you're in an area of wildfire or earthquake or whatever, you're more self-insured than you are insured, is what you're going to find out. If you've had claims, like the Floridians, who've now been through two storms on the Gulf side, Naples, Fort Myers, and that, they've had two events where insurance is, if I'm the consumer, I would say it mistreated me. But as a buyer, did I buy smart? I don't think so. So again, our solution is an all-in-one policy. Right? We give them everything they need. When and if it does happen, we go help them. We add value by being able to help them manage the claim. If they have a roofer, we write the checks and move the ball forward as fast as possible. If they can't find a roofer or materials, that's our job as the insurance industry, is to do that job. So you got to show up and do it.
So we're seeing more and hearing more about people having forced place insurance.
So again, we quote a lot of people. They've had a $10,000 quote, no flood. Now they have to buy flood. So, they got a quote for homeowners for $14,000 and floods another $4,000 or whatever. And, our all-in-one approach with no deductible and a risk share is probably going to be in that ballpark, but a little bit more money. And they think, they're focused on what they used to pay last year with the company that's now bankrupt. So the new market is definitely more than that. Even Citizens is increasing rates, and they require you to buy flood now, which they never did before. So, people don't renew. Well, when you don't renew your insurance and you have a loan, whether it's commercial or personal, the bank has the right to force place your insurance. And it is like 4 times what you used to pay. So, now it's just added to your bill, and people are starting to see it. And I predict that more and more people are going to get force-placed insurance, and the rate is extreme. Why? Because banks don't want any risk. When they loan you money on a building, there's enough equity there where if you fail, they get the building, and they're okay in most cases. Now with, the economy in some areas and commercial buildings being abandoned, banks are in trouble on some of this stuff too. So, they have to insure it. They're not taking on more risk, and so they force place your insurance, and it just goes on your bill. So when people start seeing that bill, they start looking at it a little bit differently, that, our quote isn't nearly as extreme as they thought, and they forget about what they used to pay because they understand that what they used to pay wasn't what they needed. It's not going to perform like you want if you're an educated consumer. So, Florida is like the perfect experiment. Katrina, as I've said many times, is where I cut my teeth. And the wind and flood argument, lawyers have been getting rich on it before that. And since then, certainly where I've been involved. So, I learned a lot, had a lot of, bad experiences with Katrina, but we survived it. I know how to do it right. I'm the only insurance company that took a Katrina case to jury trial in Gulfport, Mississippi. And every insurance company told me I was going to lose. The industry said we should just pay. They demanded $5 million on a $50,000 house. And we were set up. This guy was a crook, and, they were trying to make all kinds of money. And we took it to court, and 7 jurors, Mississippians, who all had homeowners claims and do hate insurance, just like I do, when we laid out the facts and showed how we treated this guy and paid his claim, they gave us a defense verdict and said, if you would have been our insurance company, we would have been happy because we went and did the right thing. We didn't run away from it or have excuses that we don't cover a part or a portion of your damage and you got to deal with the other guys. When you have 8 policies covering your homeowners, or 2 policies or 3 policies, those different policies are going to look at it differently. And there's gaps between them. And they point at the other guy and say he's underpaying it. So that's why litigation has grown. It's a bad approach, a bad strategy. And, it's really simple. Right? All of this stuff is, to me, like being on the playground when you were kids. When we were on the playgrounds, we picked better partners. We knew who would stand behind us and who we could win with. Now, as adults, we seem to, give up on the person and the relationship. And that's really our focus is, partnering with people and knowing them and being there when they actually need you, not when they don't need you.
Yeah. So, really the benefit of the all-in-one is you're going to get your claim paid when
we
and
take
if
care of
happens.
everything.
Yeah,
We're not looking
it's not
at
going to be
you.
an argument with 3 different policies.
And we're not going to let you have a $50,000 deductible if you don't have $50,000 in the bank. That's a dead-end road. That's called underwriting. But we really don't underwrite anymore. We rate. And there's algorithms. You don't really establish that personal relationship and formulate a strategy. How am I going to make you happy when you get sued or when the storm happens or whatever? What is the play? It's kind of like being a Super Bowl team on the 1-yard line. They don't have a bunch of plays. They have a couple of plays they've practiced over and over again, and everybody knows their job, and you execute as planned. You don't change the plan at the last minute and run around like a bunch of little leaguers in the Super Bowl.
So, if you're an insured or you have any insureds that are interested in an all-in-one approach, and
I would say, any agent or insurance professional can contact us. We're open. We don't appoint you. We do business with you as their representative. They're your client, but if we insure them, they're our insurance company. So, we want agents and brokers to embrace all of this. We want every insurance company to embrace all of this. We would bench the lawyers if we all did it the right way. And I'm not saying, again, in the 1950s and 60s, deductibles and the way all of this worked, but lawyers didn't advertise. The world wasn't as fast moving as it is now. So, we have to play the game better. And again, everything to me is common sense. I learned it on the playground, or I learned it playing sports. And you have to look ahead of the ball. You can't, you can't avoid what's going to happen. You have to say, when this happens, what is our plan? And then you execute that way. And it's really about people that either do what they say and they show up and they'll be deposed and, they'll work with you to get to a solution, or there's people who, are going to go get a lawyer and sue you because you're an insurance company. So, the person the insured and the insurance company, and those two decision makers are the wild card. That's what insureds complain about, is the insurance company paid that they shouldn't have. Insurance companies complain about the insured. So to me, a tighter relationship should bring much better results. And, that's what I thought 30 years ago when I formed Prime. And now, we have our challenges. It never gets any easier because we do have, a lot of people that say we're wrong, but we continue to have results and see indications that, this strategy works, and it's going to continue to work the same way it has since I took over Prime in 95. We've outperformed. We have way more successes than we do failures, but, Katrina was a failure. We certainly, have claims situations that spin out of control, but we win at least 80% of the time. And you don't have to win 100% of the time. You can't always win. You can't avoid claims. You actually have to go at them and make a positive out of it as much as possible, make happy customers. So, as an industry, we make unhappy customers because instead of stepping up, we step away. We exclude firearms. We exclude assault and battery. We exclude liquor. The solution is you always go buy a separate policy for that because we don't want to do it anymore. And as a buyer, you ought to look at it and say, well, if I own a bar or a hotel or a restaurant, and you don't want to do liquor anymore, but you want to keep insuring me, is that a good strategy? I don't think so. You want a partner that covers as much as they can of your business.
Same with homeowners. You don't want a homeowner's policy that excludes flood or wind when you need it in Florida.
It makes you go buy it separately. That's the fundamental difference, is they think, look, go buy that separately. That works for us better. It isn't working. It's getting worse, not better. So anyway, I hate insurance. The solutions are right in front of us. In 92, 93, when, I had the foundation of all of this, I wasn't positive I was right. I was pretty sure. Now I'm more convinced than ever, and all of the evidence that I see, captives, all of the problems, the insolvencies, the litigation, the solutions are forming good partnerships with good people, and you can definitely differentiate yourself from, what's going on in the rest of the world, but you need partners.
Well, if you think you're a good partner and want to partner up with us, give us a call. If you're an insurance agent, we're open market, and you can come direct, start writing business with us. So my name's Parker Lindsay, Rick Lindsay, my dad and CEO of Prime Insurance and XINSURANCE, and you can find us on social media or call the office and ask for us anytime. We'll see you on the next episode. Thanks, guys. See ya.